The transcript is in English. Narration: exploring financial illusions through a young entrepreneur's risky car detailing venture.
This kid started a car detailing business, and the kid is losing like $5,000 a month in his car detailing business because he's got rent. Let's say he borrowed money to buy the machines for the car detailing and yada, yada, yada. You know, he's got workers and he's got no clients, or at least his clients are paying him just like 25 cents an hour, and he has to pay his workers like $20 an hour, right? But his dad is the CEO of the kid's car detailing business. So the kid goes to buy the car, and they're like, no way, we're giving you the loan on that car detailing business. It's losing $5,000 a month. No way. But his dad comes in, whose only income is being the CEO of the kid's auto detailing business. The dad comes in, it's like, well, I'll co-sign. And then the guy selling the car is like, oh, in that case, well, this is a no-brainer. This is a no-brainer deal. And no one takes the time to sit down and connect the dots, because it's like, well, we don't need to think this through. It's straightforward. We got the kid's dad. He's the co-signer. Enough said. And no one takes it one step further where you're like, wait a minute here. There's no way that we would lend to the kid directly because his business sucks. But his dad's only source of revenue is from the sucky business. That's literally what we're dealing with here. That's what we're dealing with. And for some reason, the market just sees Nvidia, or the kid's dad, as a cosigner, and they're like, well, this is fantastic. Nothing can go wrong here, because we know that Nvidia makes all this money, just like the kid's dad makes whatever, $3,000 a month. Well, sure, he makes $3,000 a month, but that's because his kid is losing $5,000 a month. So at some point in time, the kid's business goes bust and dad ain't going to have any income. And then the cosigner is completely worthless, because the cosigner was dependent on the original borrower. That's the bottom line. All right. So then they highlight the BIS came in with a report where they kind of talked about this. They're warning about this. I think I did a video on that. And Ed Dowd, by the way, I think he did a Substack, which was really, really good, on this AI CapEx complete nonsense. But that was before they came out with this. Just, it's almost like Jensen, Sam, and Miyagi-san, or whatever the dude's name is with SoftBank. It's almost like all these guys like get on a conference call, like a Zoom call, and it's almost like becoming a joke. Like, they get on this Zoom call and they're like, I know what we can do. We can go ahead and have Nvidia co-sign for OpenAI, and then you can go ahead and get your loan, and then you can go ahead and charge your fees and blah, 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 blah. And, our share price will go up. And then on that call, they're probably like, no, that's pushing it a little too far. I mean, the market's going to see right through this. I mean, this is just blatant Ponzi scheme stuff. I mean, we're getting to the point now where we're just, we're explicitly duping the public. This is a ruse that they're going to see through. And then they kind of like ponder for like a minute or two. And then Sam interjects. He's like, I don't know. The markets, they're pretty stupid. And then Jensen's like, yeah, you got a point. And then Miyagi-san's like, oh, yeah, I've been doing this for 20 years. I've been doing this for 20 years. They will never notice. They will never notice. The more outrageous we get, the more the market bids up the price. And they're like, yeah, but this is really a step too far. And they're like, yeah, let's just go ahead and do it. Because even if we do tank the market, even if the whole thing collapses, I mean, Who cares? We're rich. We've got no downside. And if the market does buy this ruse, then we can come back on the Zoom call next week and we can toast a whiskey and we can have a good laugh about it. Because it's at the point now where I think they're just doing it to entertain themselves. Like, I'm sure they're doing it to make money and there's no downside for them and everything. But on a certain level, I think they're like, let's just see how far we can push the absurdity just for like shits and giggles. Like, sorry if you got kids watching, but that has to be what's going on. Like, this could be an In Living Color skit. For those of you who are my age, you know that was the best comedic show of all time, right? This could literally be an In Living Color skit right now. So the question is, when does the market actually like connect the dots here and like, wait a minute, the pretzel goes around like this and it comes around like that and then it goes around this side, but it comes right back to where it started, doesn't it? And I think that's another one of the things that makes the ruse last as long as it has, because it's not circular. So you just see the headlines, and if you just scan through, you're like, yeah, this doesn't sound right, but whatever. Anyway, let's get on with my day. But because they make it a pretzel, it actually, you got to think about it a little bit, and you come to the exact same conclusion. But let's go over to the CNBC homepage, because here is where rubber could be meeting the road. What I mean by that is NASDAQ down 0.21. And keep in mind, this is on a day, guys, when oil is down 7.6%. NASDAQ should be ripping right now. And remember, Google came out last week and they had negative $5 billion in free cash flow because of the pretzel financing or what they're spending on it. And instead of the market bidding up their share price like it used to do, it's like, no, we're not playing that game. Homie, don't play that. Right? Remember that one? That's basically what the market did to Google. And it was down like 8, 9, 10% on the day. And I think a lot of the high flyers, tech names, report earnings this week. So we'll have to see. But the point there is oil way, way down. You would expect NASDAQ to completely rip on this. And it's down. It was at the beginning of the day, by the way. It's down now 0.23%. But look at the Dow. Up 0.36%. If you guys watch my videos, you know a couple weeks ago, I talked about that very powerful indicator that goes all the way back to 1971, where you see the divergence between the Dow and the NASDAQ. If you guys, let's see, I've got it right here. Join for free at rebelcapitalist.com. Subscribe on Substack. Just click the link below.